Hello, this is Eric Parnell, Chief Market Strategist for Great Valley Advisor Group. And it's hard to believe the first quarter of 2024 is now in the books. But as we look ahead to the remainder of the year, it's worthwhile to wonder, what can we reasonably expect in the final 3 quarters of the year? We'll begin by a look at the U.S. stock market. It has been a phenomenal start to the year for stocks, breaking out to the upside what was already a strong recovery from the October 2022 stock market lows. So what can we reasonably expect here as we go into the second quarter and the remainder of the year? Well, we're overdue for a pullback. Stocks have done very well so far this year, and they are now running well above trend. But that's not necessarily a bad thing, because after all, we all know April showers bring May flowers. A little bit of consolidation in the stock market would be a good thing to bring stocks back to a more reasonable level. But in the meantime, it wouldn't also be a surprise to see stocks continue to the upside. And that's because the liquidity environment remains abundant. Now let's take a look at bonds. Bonds had a phenomenal end of the year last year after what was a difficult 2022 and through most of 2023. But through the first quarter of 2024, we saw bonds pull back a bit. And that's not a surprise. We came into the year thinking that the Federal Reserve was going to provide all of these interest rate cuts. And as we've seen a stronger than expected economy, those interest rate cut expectations have pulled back quite a bit. As a result, we should anticipate bonds could be range bound here for the next several months, even through the remainder of the year. But one of the things that we want to keep in mind associated with bonds is they represent a good value. We're seeing the biggest spreads between current bond yields and the break-even inflation rates, as well as bond yields relative to the risk-free rate that we've seen in years. So although bonds may be range-bound today, they represent an attractive value for the next several years. We'll finish by taking a look at an alternative asset class in gold. Some of you may own gold in your portfolio as an insurance against market volatility. Others of you may just simply track the price of gold. But one of the ways that gold is useful is it is a measure of not only market liquidity, but also inflation expectations. And one of the things that we've seen recently that's been notable is that there's been a strong upside breakout in gold over the 2080 level that had been resistance for several years. This is indicative of 2 things. It's indicative of the fact that the liquidity environment remains supportive for risk assets, and it's also a representation that inflation expectations remain under control. As long as we continue to see gold push to the upside, that indicates that we have a favorable liquidity environment and that inflation expectations remain under control. It should be an interesting remaining 9 months of 2024, and I look forward to seeing you again soon to talk about market events as we go through the remainder of the year.